would have thought it? I am out here beating CNBC and Bloomberg to news stories. Oh my gosh, okay, how about this? Yeah, I just checked both those publications to see if they were even up on this, and they're not even up on what's going on here, essentially, okay? But they will be in a few hours, and this is going to be huge news, okay? And people are going to be talking about this tomorrow, believe me on that, okay? So I could read through all this for you guys, but basically I'm just going to tell you what's going to happen. The Fed is now going to have a closed-door meeting on Valentine's Day, okay? It's a massacre. And basically, what's going to happen now is this just got added. They're going to review and determine by the Board of Governors on the advanced and discount rates to be charged by the Federal Reserve's banks. So basically, now they're going to consider potentially changing rates in February. And this is massive news because everybody had it as like March 16th. You probably heard that date thrown out of there a lot lately, right? March 16th, hey, mid-March, they're going to decide. They're probably going to raise rates either a 0.25% or 0.5%, right? And that's what everybody's been expecting, right? And now okay, what is I hope everybody watching this video can answer me this question, okay? Please tell me you can answer this question for me. What is the number one thing the stock market hates more than anything else? Okay? It's being caught off guard. That's what the stock market hates more than anything else, is being caught off guard with something that they were not prepared for at all. And everybody had mentally put in their mind about the Fed was going to potentially raise rates in March, and we were going to get all that news, and woo. But now all of a sudden you throw it in February and it's like, oh boy, okay, what? And nonetheless, futures already started moving down on the back of this news. But here's the thing. I think only people that might be selling in the aftermarket or, in the futures market right now are probably on the West Coast. Because all the big money, all the Wall Street money, you know where they're at right now? They're fast asleep, right? They're fast asleep as this news has come out here, okay? Now, when they wake up and they find out that rates are potentially going to go up, faster than expected, before anybody really anticipated, there's a high probability there's going to be more selling and more selling pressure on this market, essentially, because of this news that just has come out of anywhere. And it doesn't mean I agree with it at all. I'm like, if you're going to make your buy and sell decisions based upon if the Fed was going to raise a month earlier or a month later, that to me is pure silliness. But I don't control what goes on in the stock market. And the fact is, there's going to be a ton of funds out there likely selling stocks in the futures market and into the market tomorrow because of this being caught off guard situation. The stock market hates it more than anything to be caught off guard in a situation like this. And no one had anticipated this, but now all of a sudden that's got added to this. And people are like, oh my gosh, like, wow, Mr. Powell, J. Powell's not messing around. I think, they saw CPI today, and, it seems like all of a sudden they're getting really, really aggressive, really, really fast. And by the way, that CPI, man, that was a bunch of BS. I looked more into that tonight. I spent some time going through the numbers. What a bunch of baloney and so much of those numbers. Oh, my gosh, okay? My dad, he always told me, the government fakes these numbers and stuff like that. And oh, boy, you look at those numbers, rent, oh, gosh, look at the rent number. What a joke, okay? And no one else has a rent number that low except in the CPI government data. Every other company that tracks this on a high level has rents that are up basically 14% plus year over year. And then the CPI, it's a joke. So anyways, nonetheless, this is bad news. Now, it's already causing confusion out there on Twitter. And remember, this hasn't even gotten to mainstream yet, but it's already causing confusion. And I can only imagine how much confusion this is going to cause when it hits CNBC and Bloomberg and all the big publications over the next several hours and into tomorrow, okay? But for instance, this, gentleman says, there's a Fed board meeting on the 14th after Fed's Bullard, which, by the way, the Fed's Bullard, he basically came out and he said that he's, wants rates to be 1% by the summer, essentially. So that freaked the market out a little bit today, and that's why we sold off so heavy after he all of a sudden came out and sounded really, really aggressive. Now all of a sudden you throw on top this meeting, and everybody's like, okay, why is the Fed getting so aggressive so fast? Well, they've been lagging this whole time, right? So after the Fed's Bullard raised the specter of intermeeting hike last night, have seen messages saying hike coming on the 14th. This gentleman says, not correct. This is a regular board meeting. Not all voting members attend. Nothing to do with rates. Okay. Yeah, that was like that until this part got added right here. Review and determination by the Board of Governors of the advanced and discount rates to be charged by the Federal Reserve banks. So it was all fine until this part got added, okay? And so now we're in a situation where the Fed could easily, in that meeting, make some big decisions that the market is not ready for, or not going to pay attention to, or something like that. That it's a closed door meeting, right? So this is one of those big deals, and I think it's causing confusion. It will cause more confusion tomorrow. And wait a minute. What's the Fed doing here? Are they really going to announce they're going to raise rates coming out of this meeting? Or are they setting up for raising rates? What's the situation here, right? And I'm seeing people put stuff like this. If the Fed, does an emergency rate hike just 2 weeks after their last meeting, it would make them look completely incompetent and out of touch. How do you keep rates on hold and then 2 weeks later have an emergency hike? Well, there's a lot of reasons. You could see CPI come out today at 7.5%, which was kind of a BS number, as I said. And Powell and folks could look at that and say, man, this is the CPI numbers were worse than expected. 7.2 was expected. It came in at 7.5. So inflation's worse than they thought. And those are lowball numbers. They're sandbagging lowball numbers at the end of the day. And so I think Powell and the rest of Fed are looking at this in this situation and like, man, we better get on it. Like we can't just sit around month after month after month and be like, let's just have our meeting in March and then we'll figure out something. I think there's a pep in their step. There's like a sense of urgency that like, hey, we need to do something. And the thing with the Fed is they acted very fast when we went into Rona, right? And on March 15th, they announced they were going to use all the tools necessary to make sure we got out of this situation of the pandemic and all those sorts of things, right? And they were very fast to act, and they saved the market because the market ended up bottoming within pretty much about a week of them putting out that statement, right? And so they acted very, very fast, but they've acted extremely slow when it comes to inflation. And they see things getting worse and worse, and I think they are kind of figuring out, oh boy, we better get on this, right? Now, Goldman Sachs raises their forecast on Fed tightening this year. The bank, Goldman Sachs, now expects 7 straight rate hikes. That's one every meeting in 2022. And the big question is, what is Goldman Sachs expecting for rate hikes for each one? Are they expecting 0.25% or are they expecting 0.5%? Because that's a big difference, right? I mean, that's the difference between we could be at like, let's say 2%, somewhere in the 2% range by the end of this year, or maybe a 3 or 4% range, maybe even approaching a 5% by the end of this year. That's a way up there number. But nonetheless, you have Wall Street, investment banks, everybody pretty much putting these huge expectations on how many rate hikes there are going to be essentially now in 22. And everybody's expecting there to be a lot of rate hikes and big ones nonetheless, okay? And so what this is going to end up causing is it's going to likely end up causing, more volatility in the market and a bigger shaking of this market. And like I said, for me personally, I'm not going to make any buy or sell decisions whether the Fed raises in March or February or April. That's, to me, that doesn't even register, right? But to the market, this stuff matters. And hedge funds and the funds in general, they hate being caught off guard out of nowhere. And if all of a sudden you're talking about, oh, now we might do something in February, they're not going to like that, and they're going to shake up this market more. So, yeah, anyways, guys, that's about that. The good news is if you're a buyer of stocks, you're going to get some more deals likely out there tomorrow, and we'll see where kind of things go from there. Always keep in the back of your mind that in these rate hike cycles, ultimately, it is bullish for stocks. Almost every single time, it is bullish for stocks. In the short term, you have to go through some crazy volatility and some major shaking of the markets to get to that other place. But do keep in mind, ultimately, it is bullish, right? So anyways, guys, hope you enjoyed this. As always, beating the big guys to the big news, okay? Make sure to subscribe to this channel if you're not already subscribed. You're slacking, man. Anyways, guys, much love as always, and have a great day. Check out pinned comment.